So if you're like most first-time home buyers, you start the process not having a clue where to start the process. So in this video, I'm going to teach you all of my best tips and advice for people who have no idea where to start. So one of the very first things that you need to start with is the financial preparation of getting prepared financially to purchase a house. Now, when it comes to financial preparation, there's three main things that you should prepare for, and that is the out-of-pocket costs, the closing costs, and the down payment. So we'll start with the out-of-pocket costs. There are just a couple of items that you need to make sure that you are financially prepared for if you're getting ready to buy a house as it relates to your out-of-pocket costs. The first one is the earnest money deposit. Now, an earnest money deposit, the first thing that you need to know is that the earnest money deposit is not actually extra money. It's just a little bit upfront. The earnest money deposit is simply a deposit showing good faith towards your offer. So you structure an offer, you put it in front of the seller, and one of the terms of your offer is that if they accept the terms of that offer, then you will put a little bit of skin in the game. Also, you need to understand that generally the earnest money deposit is going to be protected by a series of contingencies so that if you have a really negative inspection or something comes up that is under the scope of those contingencies, then you would be protected and it would be returned to you. You do need to know that when it comes to your earnest money deposit, the main reason you might lose your earnest money deposit is if you just simply change your mind. If you just change your mind, you find another house that you want to buy, more than likely the seller is going to attempt to lay a claim to that earnest money deposit. The next out-of-pocket cost is going to be your inspection. Now, an inspection generally is going to be on behalf of the buyer. So usually the language in a purchase agreement is that the buyer reserves their right to do an inspection at the buyer's choice and at the buyer's expense. Depends on what market that you're in and what kind of inspections you're getting on your home. Usually you can expect about $300 to $500 for the inspection. So make sure that you're prepared for that. I always advise that you get a professional inspection when purchasing a home, unless you are an experienced buyer or you are a buyer that knows that you're comfortable purchasing the house without an inspection contingency. Now, the last main out-of-pocket expense is going to be the appraisal. A lot of people get the appraisal and the inspection confused. The inspection is meant for informational purposes for the buyer to understand the condition of the operating systems and to make sure that they understand what the condition of the house is. The appraisal is a third-party opinion of potential resale market value. So the inspection is meant for the buyer to understand the condition of the property, and the appraisal is meant for the buyer to understand what the likely value of the property is. On to the next thing that you need to be financially prepared for, and that is your closing costs. Now, closing costs are simply fees and services that are required for most real estate transactions to be consummated. It's important to understand that both the buyer and the seller have closing costs, and they're completely different and independent of one another. I'll stick to what the buyer side of the closing costs are in this scenario, so I'll stick to just explaining what the buyer's closing costs are. The first thing incorporated into your closing costs is if you're getting a mortgage, generally you are going to be paying mortgage origination fees. Mortgage origination fees are just the fees that most lenders charge up front for doing all of the labor that it takes to actually originate a loan. So all of the processing and underwriting, generally you will be charged a fee for these services. The next one is the mortgage insurance policy. A mortgage insurance policy is simply an insurance policy that you will purchase on behalf of the lender to protect the lender's interests and make sure that there's not going to be any problems or anything coming down the road for the lender. The next one is the settlement. So you have to pay the title company and all of their workers to actually prepare the settlement and get everything ready for the closing. The last thing incorporated into the buyer's closing costs are the prepaid taxes and the prepaid insurance. Now, Normally, when you make a mortgage payment, that payment actually goes in four different ways. A portion of it goes to the principal. A portion of it goes to the interest, a portion of it goes to the taxes, and a portion of it goes to the insurance. So every month you make a mortgage payment, and part of that mortgage payment is 1/12 of the annual tax bill and 1/12 of the annual insurance bill. In other words, 1 month's worth. So think of it like a piggy bank. Every month you make a payment, and that piggy bank gets filled up a little bit more and a little bit more, and then once a year, the insurance company sends a bill, and that piggy bank pays that bill. Same thing with your taxes. So depending on the day of the year that you purchase your home, that piggy bank needs to be a certain amount full for that particular day. So a portion of your closing costs is to make sure that those escrow accounts or those piggy banks are filled up to the amount that they need to be filled up to on that particular day. These are called prepaid taxes and prepaid insurance, and it's a portion of the buyer's closing costs. The last thing is it relates to your financial preparation that you'll want to be prepared for is your down payment. Now, I'm not going to spend much time on this because that's its own separate video, and actually I'll put a link right here that you can go watch that video, but you need to be financially prepared for the down payment that you're going to need if you're getting a mortgage for the house. Now, your down payment is going to very much vary based on two main things. The first one is your loan product. So generally, your down payment that is going to be required is anywhere from 0% down, technically, because there are mortgages that you can get with no down payment, all the way up to usually about 20% down as a requirement. The second thing is the amount of equity that you want to start that mortgage with. So if you have a lot of capital, maybe you just sold your house and you freed up some equity and you want to roll that equity into your new house, you can put 30, 40, 50% down if you so choose. And all you'll be doing is rolling that equity into your new house. So make sure that you're financially prepared for whatever kind of mortgage that you're going to get to make sure that you are financially ready for that down payment. On to the next section, and that is tips and advice for your home search. So when it comes to home searching, one of the best pieces of advice that I can give you is to create a needs versus wants list. Now, when you're formulating this list of needs and list of wants, one thing that I tell a lot of my clients is to simply ask yourself, what is your vision for your life as it pertains to your housing over the next 3 to 7 years? Because a lot of people think much more long-term than they're actually likely to stay in the house. So I always tell them 3 or 5 to 7 years, and kind of what is your vision for your life as it relates around your home? Now, a list of needs should be a list of amenities that you would not consider purchasing any home that didn't offer every single amenity on that list. In other words, you don't even want to look at any houses that don't have all of the elements that are on your needs list. And on the other hand, a wants list are a list of preferences that would be preferred, but not necessarily a deal breaker or something that you would say, there's no way that I could make this work. Make sure that your agent knows what this list is because it really helps us. So if you're telling me, hey, Kev, I would consider purchasing a house that didn't have a fireplace, but I really love fireplaces, and I hope that the house that I purchase has a fireplace, this would really help me. So when I'm out searching for houses every day and I happen upon a house that's a 3-bedroom, 2-bathroom house and I say, wow, this would really work for my client, and then I also notice that it has a fireplace, this will make sure that it even furthermore triggers for me to get a hold of you or for me to send you that listing. So it's important for your agent to know that wants list as well. The next tip and piece of advice that I would have for you as it relates to searching for homes is to really make the location one of the main catalysts when you're searching for a home. The reason that I say that the location should be a main catalyst when you're searching for a home is because the location is the ultimate unchangeable. For example, if you purchase a home that's on a 5-lane, really busy road, that house will always be on a really busy road. That will always impact the way that you're able to live in that house. So it's the ultimate unchangeable. If you purchase a home that is maybe in a community that you don't prefer or is far away from your work or something like that, it is something that you cannot change. So it's a really big piece of the puzzle when you are searching for a home, and it could be a potential source of heartache and something that you just simply can't change. The next piece of advice, and you will thank me later, is when you see a house and a listing on Zillow or on Realtor.com or something like that, and you're really interested in it, do yourself a favor and just go drive past the house before you schedule a showing on it. Almost always you can completely validate your interest in a house or completely eliminate your interest in a house by simply just driving past the house. So thank me later. Always drive past a house that you are interested in before you schedule a showing. My last home searching advice is to go to open houses. Going to open houses is a great way for you to dip your toe in the water without actually having to schedule showings. It's a great way to shop maybe just above your price range to see, what that next tier looks like. Or it's just a great way to explore different houses without actually having to go through the process of scheduling a showing and going and seeing it in private if you're just kind of interested in it. A few tips and tricks about going to open houses are, the first thing that you need to know is when you walk through the door of an open house, there's going to be a real estate agent standing there. They're not doing anything wrong, but they work for the seller. So if you watch my videos and you follow me, you know that the very first step to purchasing a home is to hire your buyer's agent. So hopefully by this time you've already hired a buyer's agent. But my best piece of advice would just be to greet them, understand they work for the seller, so it would make sense that you don't want to disclose any pertinent information about yourself or how interested you are in the property. Just walk around the house, be polite. If there's any interest after you've seen the property in the open house, just let the agent that's at the open house know that you will be in touch with your buyer's agent. And then if you're interested, call your buyer's agent up and schedule a private showing where you and your agent can go and see the property in private, so where you can objectively analyze your options. But definitely go to open houses. They are a great resource for people who are just dipping their toe in the water, or maybe just want to shop maybe just outside of their price range, or explore other listings that they might not otherwise want to actually schedule a showing for. On to the next section, and that is to make sure that you understand the home mortgage process. The first thing that you need to know is that there are two main directions that you can go with a home mortgage, and that is conventional financing and government-backed loans. Now, on the conventional side, generally speaking, this is just where a lender extends a line of credit to a borrower, and in most cases, they even service that loan, but in some cases, they'll sell it after a couple of years to free up that money to be able to extend lines of credit to other people. On the other side, there are government-backed loans. Now, this means generally that the lender will extend a line of credit, but it is actually backed by one of the government organizations. Now, the main loans, government-backed loans that we generally deal with on a day-to-day basis as real estate professionals are FHA, which stands for the Federal Housing Administration, VA, which stands for the Veterans Association, RD, which stands for Rural Development, and DPA, which stands for Down Payment Assistance. And this could vary in a lot of different programs that will help some buyers out with their down payment. The main difference between conventional financing and government-backed financing is usually those government-backed loans, they in a lot of cases have a much smaller down payment, but they do have additional underwriting and conditional standards and a few more headwinds to have to overcome to get those kind of loans. But this isn't a deep dive on loans. I just want to make sure that you understand the home lending process. It's a huge part of the home buying process. The next piece of advice that I would have as it relates to the home lending process is to understand that when you're shopping for a home mortgage, I like to tell people it's very much like shopping for a vehicle. And the reason I say that is because just like shopping for a vehicle, there's going to be a plethora of different options that are going to be available to most people, and it's not a one size fits all. So think of it like this. Some people need a pickup truck. Some people might have 4 or 5 kids and they need an SUV. There's no right or wrong answers. It's just about which option works best for you. Another thing that likens it to purchasing a vehicle is just like purchasing a vehicle, every lender has different versions of kind of the same options. So just like Ford makes a truck, Chevy makes a truck, Dodge makes a truck, they all make trucks and they all do truck things, but they're all just slightly different. It's the same way when you're shopping for a home mortgage. So every lender that offers an FHA option might just offer a slight variation of that option that might work better for you over another lender. So there's no right or wrong answers, and it's not a one size fits all. It's all about making sure that you understand that it's kind of like purchasing a vehicle, and it's important to shop around a little bit. The last thing is that once you understand the process deeply and you understand your options, you can use this understanding to actually utilize different options and different scenarios to actually leverage your position, because some loans and loan products work better in some scenarios than others. So by understanding the process, understanding what your options are, you can really use this information to actually leverage your position and advantage yourself when purchasing a home. All right, moving on. And this section is about making an offer. The first thing that you need to know is to go into the offer part of the home buying process with a strategy. The initial offer that you make is going to set the tone for the entire home buying experience. So you want to make sure that you're going into this process with a very thoughtful strategy to make sure that you're able to effectively achieve your objective, which should be to get the house. You need to know that the seller is not your enemy when you are purchasing a home. The seller is the only person who can actually give you what you want. So you need to go into that process trying to arbitrate a strategy that's going to give you a very good chance to box out the real enemy, and that is the other buyers. Just know that when you're structuring an offer, you want to make that offer as easy as possible for the seller to say yes to. In other words, make sure that your offer is very attractive and has advantageous terms for the seller, and that will give you the highest likelihood of actually getting the house. The closer that you offer to what the seller is looking for, the more likely you are to get the house, and the further you offer from what the seller is asking for, the less likely you are to get the house. The next thing that you need to know is that there is more than just the price when you're structuring an offer, and the price isn't the only thing that matters. There are usually about a dozen different negotiable terms in most purchase agreements, so it's important to understand that the price is generally going to be the main thing that the seller cares about, but there are a lot of other different ways that you can make your offer more attractive than just the price. Things like the loan type, the inspection contingency, the inspection time frame, the appraisal, all these different things could potentially come into play when the seller is making a decision of which offer to pick or whether or not to counter your offer or what have you. So make sure that you know that the price is the main thing, but it's not the only thing. The main thing is that when you're structuring an offer, you're negotiating an offer to find the balance between risk tolerance and appeal to the seller. Everyone's risk tolerance is slightly different, and you need to just go based on what your risk tolerance is. But if you are expecting to get a house in this market, you're going to have to find some kind of balance with the seller for making sure that it's appealing enough for the seller to accept, but also not exceeding your risk tolerance. And the last section is the home inspection. I'll start with the home inspection golden rule that I tell all of my buyers as it relates to their home inspection. I always tell them, to structure your offer and to negotiate terms as if you intend to purchase the house in its as-is condition, barring any unforeseen major material defects with the property. Also, I always tell all of my clients to always hire a third-party professional home inspector. And here's the reason why. A lot of people will try to save a few bucks by having their dad or their uncle or cousin or somebody do their home inspection, but this is ill-advised, and there's a couple of reasons why. The first one is that dad or your cousin or Uncle Buck or whoever, they're not unbiased. They are not coming into the process without any biases, and a lot of the time they're coming in and trying to save the day, and what they're really doing is just lessening your likelihood of actually having a successful transaction. The next reason is that if they do, and maybe there is some kind of major material defect, if dad uncovers this defect, the seller is not going to take dad's word for it. In other words, you are going to have no negotiation leverage whatsoever. But by hiring a third-party professional inspector, these are reputable people known around town for doing home inspections, and by hiring them, generally you are going to get a 40-page professional report with pictures and tangible evidence of these material defects, giving yourself a lot higher likelihood of being able to successfully negotiate repairs or something if needed. Also, they come into the process completely unbiased, so their objective is just to simply report the condition of the operating systems for better or for worse, and to just help you understand what's normal and what's not normal. And the very last thing is, when you're going into your inspection, try to go into it with the mindset that you're doing it for informational purposes as much as possible. But again, we're looking at the 6 major operating systems of the house. That's the roof, the windows, the plumbing, the electrical, the foundation, and the heating and cooling system. What our expectation should be is that they are working as they should. They're very rarely going to be brand new. They're very rarely not going to have normal minor defects or deferred maintenance. But the key is you want to make sure that you're only attempting to negotiate deal breakers, because you're putting your deal at risk by attempting to negotiate repairs or credits. And something that I tell my buyer clients is, the less you are asking for, the more likely you are to get it. And the more that you're asking for, the less likely you are to get anything. So when a seller sees a laundry list of repairs or credits, the more likely they are to just simply completely emotionally detach from the deal and just say, forget it, and the whole deal blows up. But if you're only negotiating deal breakers and you just come with 1 or 2 things that are really important to you, the seller is more likely to work with you. So always make sure that you're only negotiating deal breakers when you're attempting to negotiate repairs or credits due to inspection findings. So that's it, man. That is a 101 crash course on what I believe that if every buyer knew those main core fundamental things before they started the home buying process and really understood those particular elements of the home buying process, they would have a major advantage over 90% of the home buyers that they're competing against in the current market. So I hope you got some value from that video. And if you did, please give it a like and a share and subscribe. And as always, thanks for watching.